Welcome back, everyone. This is Premium Bells, one of the founders at Mastermind Investment Group. In this video, we're going to be going through the sniper wave strategy. This is a highly anticipated video, which is finally ready. And we're going to be going into as much detail as possible about how you can use this system to get the best results from our scanners. So before we do get into the video, there are a few frequently asked questions that I want to address on this video in regards to this system. Number one is what pairs to trade and what time to trade. So to answer that question, I'm going to recommend a notepad and pen and for you to pause the video so you can list what I'm saying down. So the four asset classes that I trade are commodities, indices, crypto, and Forex. And the two windows that I like to trade is the London session and the New York session. So I typically trade anywhere between 9 a.m. in the morning UK time till about 10 a.m. And then my second session is roughly 1 p.m. in the afternoon UK time to 2 p.m. So when it comes to the London session, here are the pairs that I trade. When it comes to commodities, I would trade Brent oil, crude oil, gold, and silver. When it comes to indices, I would trade FR40 and German 30. And when it comes to Forex, I would trade Euro GBP, Euro CHF, GBP CHF, Euro USD, GBPUSD, Euro JPY, and GBP JPY. Now let's move on to the New York session. Here are the pairs that I typically trade. When it comes to commodities, I'll typically trade crude oil, gold, and silver. When it comes to indices, I'll typically trade US 30, NAS 100, and SP 500. And this is the session where I also trade crypto. That would be Bitcoin, Ethereum, and Ripple. Lastly, here are the pairs that I'll trade in Forex for the New York session, and that is Euro USD, GBPUSD, USD JPY, USD CAD, and USD CHF. Now you can trade whatever pairs you want to trade and do your own research, but after extensive research, I found these are the best pairs to trade within these two windows. Now let's talk about risk management. Something that none of you want to hear. This is not financial advice, but I personally risk no more than 1% per trade, and I recommend to some of my friends with smaller accounts to risk no more than 5% per trade. This is super important because you will incur losses when you trade, and the rule of thumb is to live to trade another day. One of the things that I've learned is that if you can't take 20 losses in a row without blowing your account, you're risking too much. Now let's get into the actual system. I'm going to show you how Sniper Wave actually works. It's a combination of Sniper Pro and Trend Wave. First things first, I like to check the news. I'm looking for red folders. Right now it's Friday the 2nd of January. There are no red folders typically because it's bank holiday, but I'll show you an example of what this looks like. If we go back to Wednesday the 31st of December, we can see that there's red folder news on US dollar. So my rule of thumb, if there's a red folder, I am not going to trade that particular currency for that session. If I do trade that pair the same day, it would be after the news and within the following session. So for example, if there was USD red folder news in the London session, I would not trade the pair US dollar, but that same day I may trade the US dollar in the New York session depending on how the market reacted. If you're new and unsure, it's best to just stay away from the red folder pairs and trade the following day. So first up, we have Sniper Pro. All we're looking for are three simple confirmations. Number one, we want to know if the market is bullish or bearish. It would show us right here at the top. In this example, we're looking at US 30 on the 5-minute time frame, and it currently shows bearish. Now, after seeing if it's bullish or bearish, which it could be either more, bearish just means it's a seller's market and bullish means it's a buyer's market. The easiest way to see, bearish will show red for sell, bullish will show blue for buy. So the second thing I want to know is that, is the market trending? This is super important because I only want to get into a trade if the market is either trending up or trending down. In this example, the market is actually pulling back, so I don't want to get into this trade. Vice versa, if it shows consolidating, I also don't want to get into the trade. Last but not least, it needs to show very strong before I want to get into the trade. I don't want to get into a trade and the market is very weak. It means it's not really going to move far. So in this example, US30 on a 5-minute time frame is not a trade that is giving us confirmation. So whilst we're on this topic, let's cover the time frames. A big question that gets asked is, what time frame should we be trading on? Now with this system, we have a rule. We need to see our confirmation on 3 separate time frames minimum. But this isn't just any time frame. It's got to be specific time frames that I'm going to share with you right now. So time frame number 1 is the 5-minute. Time frame number 2 is the 15-minute. And time frame number 3 is the 30-minute. That is option number 1. Option number 2, number 1 is the 15-minute. Time frame number 2 is 30-minute. And time frame number 3 is the 1 hour. So I want to explain that again so it's simplified. On the left-hand side, you've got the first option. You've got a 5-minute, 15-minute, and 30-minute. The confirmations must be showing on all 3. On the right-hand side, you've got the 15-minute, 30-minute, and the 1 hour. Confirmations must be showing on all 3. So let's actually find an example of something that is ready. So I'm going to look at FR40 on indices. And as we can see, the 5-minute shows bullish, trending, and very strong. This is a confirmation that we want to see. So I'm going to move on to the 15-minute. And it shows exactly the same thing. It shows bullish, trending, and very strong. That's a bonus. Now let's check the 30-minute time frame. Again, it shows bullish, trending, very strong. So my 3 confirmations are now complete. So just for further confirmation, we're checking the 1 hour, and it also shows bullish, trending, very strong. So we have confirmation on all 4 of the time frames that we look at, which is a big bonus to show us that this is a trade that we can look to take. So next we're going to move on to trend wave, which is the scanner that we use to actually find the trade. So all we need to make sure of is that the exact pair that we saw on Sniper Pro is the same. So we're currently on indices. We're looking at FR40. Number 1, we can only take a trade on the time frames that we're analyzing Sniper Pro on. So that will be the 5-minute, 15-minute, 30-minute, or the 1 hour. Those are the only time frames that we're taking trades on. The second rule is we can only take a trade that is between entry and the stop loss. If the trade is already in profit, then we are not able to take it. So I found an example on a 2-hour time frame. As we can see, a buy has been called out on FR40, and the current market is above the entry, already in profit. So if you ever see something like this, this is not a trade to take. So let's start by flicking through the time frames that we've analyzed Sniper Pro on. On a 5-minute chart, there is a buy that got called out on trend wave, and we're currently between entry and stop loss, which means we can take the trade from where it is. On a 15-minute, a buy has got called out, but we're currently already past the entry in profit. So this is not a trade that we can take. The 30-minute is also giving us a buy option, and the price is currently between entry and stop loss, which is a trade that we can take. And last but not least, the 1 hour is also giving us a buy that we can take, and is actually below entry, between the entry and stop loss, which actually means we can get in at a much better price. Now, in this example, when you have trades given to you on all the time frames that we analyzed, which time frame do you pick? Typically speaking, if I see a trade on a 15-minute, 30-minute, or 1 hour, I will be more inclined to use any of those 3 time frames than the 5-minute, because I noticed the stop loss is usually slightly bigger, which means there's more room for the trade to go into drawdown. But what I've also noticed is that a lot of the time where there's no trade on a 15-minute, 30-minute, or the 1 hour, there is usually a trade on the 5-minute. So I use the 5-minute time frame on trend wave as a last resort when I can't find a trade on the 15, 30, or the 1 hour. So in this example, we have a trade on a 30-minute time frame. As we can see, the stop loss is a bit bigger than a 5-minute. So this trade will give us more room for it to go in drawdown and hopefully go in our direction. Now, the next step from here is to literally take the trade. This is a tool on the left-hand side that I like to use to calculate what is my risk to reward. So if I paste this tool over here and I'll drag the red all the way to stop loss. And another question that people ask is, what exit should I go for? Well, for me, it's simple. If you're a beginner, you're looking for a risk to reward ratio of at least a 1. So that would mean that you just hover along until you see the 0.9 turn to 1. There we go. And what I'll do from there is just round it up to the nearest exit. So the nearest exit will be exit 2. So all this means is that whatever we're risking, we're looking to gain a roughly the same amount. So if we're risking $10 on a trade, we're looking to gain $10. If we're risking $50 on a trade, we're looking to make $50 if this trade goes to hit exit 2. If we're risking $100, it means we're looking to make $100. My rule of thumb is always look to gain at least the same amount or more than what you're risking. As a beginner especially, that part is super important. Now, for those that are a little bit more experienced, you can go for a higher risk to reward. I typically go for a 1 to 2. So in my situation, I'll be going for between exit 3 and 4. So if we round this up to the nearest exit, that's a 1 to 2.2. That means if I'm risking $10, I'm going to make $20. If I'm risking $50, I'm going to make $100. And if I'm risking $1,000, I'm going to make $2,000. One rule of thumb, your risk amount should always be the same every single trade. You shouldn't be risking $10 one trade and then $50 another trade, or your results are going to be inconsistent. So pick a window where you're going to take 20 trades at least with exactly the same dollar amount risk and exactly the same dollar amount reward, so you can actually see what your progress is looking like. The moment you start taking random trades with random wins and random losses, you're not going to be able to track your actual progress. So again, for argument's sake, if you're brand new, I'd recommend stick to a 1 to 1. So once you've done that, you can actually take the trade. It will be a market execution. You can see the entry is right here. You don't actually need to know the number for the entry because you're going to enter as a market execution. But where it says invalidation, this is your stop loss. And in this example, we're going for exit 2. Now, of course, this video is pre-recorded, so don't take the actual trade. By the time you see the video, this trade is long gone. But this is a live example of what it would look like to take a trade. Let's see if we can find 1 or 2 more examples and go for it again. Okay, so we have an example on GBPUSD. As you can see, we're on a 15-minute time frame. And this is on a flip side. We're actually seeing a bearish market. It shows it's trending and it shows it's very strong. So now I'm going to look over on the 30-minute time frame. It shows exactly the same thing. Bearish, trending, and very strong. And last but not least, on the 1-hour time frame, it's also showing bearish, trending, and very strong. For this particular pair on a 5-minute time frame, it shows bearish, pulling back, and strong. So again, that is not a time frame that we want to be trading on trend wave. We only want to be trading on time frames that correlate with the confirmations that we saw on Sniper Pro. So in this example, when we do look at trend wave, it would only be the 15-minute, 30-minute, and the 1 hour that we're looking to take a trade from. Even if we don't see trades on those time frames and the 5-minute on trend wave gives us a trade, we are not going to take it because Sniper Pro on a 5-minute is not showing us our confirmation. So let's look at what trend wave is showing us. On the 15-minute time frame, we do have a sell, but again, it's not between the entry and stop loss. It's actually gone to hit one of our exits, so that trade is unavailable. On a 30-minute, it's got a bit closer. It's gone into profit. It's hit exit 1. Again, this is not a valid trade because it needs to be between our entry and our invalidation. Last but not least, we do have the 1 hour chart, and voila, we do have a trade on our hands. The current market price, as you guys can see with this dotted blue line, is between our entry and our invalidation. So we can go ahead and take this trade. Again, just for the people that are new to trading, this is a recorded video. So by the time you see it, this trade is not ready. Please do not enter this trade. So again, I'm going to find my tool, but this time I'm going to go for a short position. Long position was for a buy, short position is for a sell. So I'll click on it. I'll hover around the entry and I'll click. And then again, I'll roll my stop loss all the way up to invalidation. And then I'll keep going and I'll keep my eye on where it says risk to reward ratio. Right now it's at 0.87. I want it to say 1.0 at least. So as we can see, we're bang on exit 2, which gives us a 1-to-1 risk to reward. So if you're new, in this example, you'd get into the trade, your stop loss number is here, and your exit is 1.99455. And if you're more experienced and you're going for a 1-to-2 risk to reward, you can just drag it down, and that'll be roughly around exit 4. So there you have it. That's all there is to it. It's a very simple, duplicatable system that you can follow. I do highly recommend that you screenshot and journal every single trade. By the time you see this video, we should have a journal out as an organization. And that way you can track your progress, track your wins, track your losses. And the most important thing is you want to find the style that works best for you.